What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we're going to be talking about FedEx, ticker FDX. But before I do, I'm going to give it just a couple seconds for people to trickle in here, and I could tell a funny story about this weekend. So, I don't know how many of you have ever gone paintballing, but I never have. So, I'm up here in Chicago. Part of the reason why I came back was for a bachelor party for one of my good friends. So, as part of the bachelor party, 11 of us went paintballing. Never been paintballing. So they all said, bring loose-fitting clothing and whatever. So make sure you're all covered up. So I was all covered up. It's kind of funny. They're like, "Oh, dude, the Miami guy just got off the yacht, and now here you are paintballing." Because I literally, I was wearing old khakis that I don't, that were stained that I didn't need, and then like a big white zip up. So it was fun, and then of course white Jordan ones, like some older ones that are kind of beat up, and the very last minute of it. So we did it for about an hour and a half, 2 hours. The very last minute, I turn the corner. We're trying to take this house where my buddies are at. I turn the corner around this bus, and I get hit directly where you never want to be hit with a paintball, right below the belt, and it hit me pretty square. It hit me pretty good. It was terrible. Man down. Everybody kind of stopped, came over. I recovered just fine. Everything's intact, but it was pretty terrible. And of course, hindsight's 20/20. Why weren't you wearing a cup? Well, yeah, I guess. But nonetheless, man, it was pretty bad. Looking back on it, it's hilarious. I think it's the funniest thing on earth. But just interesting stuff. Okay, so yeah, Kurt, paintball below the belt. That was the funny story. And now, actually, what's funny talking about it? Now it hurts that I'm talking about it, but it's been fine. It's been fine. What do we do with play? Well, I guess specifically what. Yeah, right. If I do have kids, one of them's gonna be born with a paintball stain on his head, um, like a Gorbachev, like a port wine stain, except it'll be white paint somehow. I think I'll be fine. Um, so Dave and Buster's, a little pullback here. Now we're starting to trickle up a little higher. I think it's looking okay. I think it's all right. I'll check back in on Dave and Buster. This is so overall the market, guys. Just in general, um, I did a Sunday edition of Momentum Trader, and in that, what I was telling people is we need to keep a close eye on what the Nasdaq does this week, and specifically what not just the Nasdaq as a composite, but the individual components of it. So of course, huge news on Amazon, but look at the gap up today, pushed up. So really just go through your FANG stocks, see what everything's doing. This is ticking higher a little bit. So we're not quite out of the woods where we can say that it's over, because Netflix is still under some pressure here, and the market's still kind of chopping around. But Nasdaq is leading the way today, so just keep an eye out if you see this start to creep back down over the next couple of days. I don't think it is. I think we're going to go ahead and just push on through this, and we're going to come over on the other side, and it's going to be fine. And again, the thing to keep an eye on, guys, is these money flows. If these start to really tick down as some of these stocks are breaking down below, if they break down below, of course, of being assumptive. So we'll see, right? Apple really under a lot of pressure too. So it seems like Apple and then Netflix had it the worst. Of course, Amazon's news definitely helping the Nasdaq. So I think, I don't want to go out. I don't want to say we're out of the woods yet on the Nasdaq, because we're certainly not. We really haven't retraced all of this move even. Now we can zoom in and get a little closer. Let's do that. That's far enough, right? The 9th, that should be. What's today? Let's do 10 minutes. Yeah, the 9th was far enough. Okay. You can draw your fibs, right? Here. Boom. Nice little retest to the lows on the Nasdaq. There's the high, spike down, right? Put in the low, retested the low last week. We've gapped up here today. This is already good. That we're breaking through here a little bit. But remember, you got to watch for these rope-a-dopes. Like I call them rope-a-dopes, but really it's a stop hunter, right? It's guys, they force this market up. They take it a few ticks, hoping to get people that are going to jump on the bullish train and hoping to get the stops for the guys who are short. And that's what they do. But I wouldn't be surprised if the Nasdaq trends higher for the rest of the day. It's above this level, right? But again, remember, they do the rope-a-dope. If that holds, or if that breaks rather, then you've got the next stop, sort of the 62.56s. And then, of course, I could draw. I'm not going to draw it yet today, but so your 76.4, you got to go ahead and draw that in. So that'll be in here somewhere, and that'll be the next level. It'll probably end up being 6,300. That's going to be that resistance level, I could bet, without even drawing it. There's all sorts of places you can learn about fibs. Doc, all over the place. I guess the easiest, just like the Investopedia thing. I have an article I wrote called Trend, Trace, and Trigger back in the day that explains fibs a little bit. So there's places. I should probably get on doing a little bit more detailed lesson in that. But for now, what you need to know, I guess, the crash course is this is based on the golden ratio. So it was like Leonardo, not Da Vinci, but what was his last name? De Pisa, I think it was. Was a mathematician back in the day, and noticed these ratios that were appearing sort of just in nature, and so there's a Fibonacci sequence where you add the previous two numbers, and then you get the third. And that continues, and then when you come for ratios between those levels, then that's when you start to run into these 61/8 and all sorts of stuff, okay? So anyway, all right. Let's get back to business here. Let's look at FedEx. Of course, we don't start with the technical chart. We always start with the price consensus CPS surprise here on Zacks.com. And as always, the black line corresponds to the right y-axis, which is price. The little green arrows, earnings beats. The red arrows, earnings misses. The multicolored lines represent the evolution of our Zacks consensus estimates over time. And what do you see here? You see lots of growth with FedEx. And it's very predictable. And, this is one of those ways where you can certainly play the global economy, because the more people are shipping goods back and forth, the more there's going to be demand for logistics coming from, FedEx, UPS, the big shippers of the world, right? So you got this big, nice growth here, and that's cool. I like it. Consistent upside, good stuff going on there. So there's that. So overall, I'd say, and then we look at a couple of misses in a row here for FedEx after a string of beats. It's been a little choppy around earnings time, though. Look at this. I mean, we just chop all over the place, right? Surprising amount of volatility that we have here. But just choppiness. And then oftentimes choppiness just in a range, right? So this is an interesting story here where even intra-quarter, if you see here, they have a beat, they come down, and then they rocket back up. And here, Just move higher, and then it retraces a good chunk of it. So these guys have a tendency to kind of move in a direction and stop and change their mind. So when we're looking at option strategies on that, we need to keep that in mind, right? So maybe this isn't going to be one of those things where we look for post-earnings drift consistently in one direction over time, okay? Maybe this is one where we end up fading some volatility in it. Maybe going short on our spreads is going to be the way to go here on FedEx. Detailed estimates page. If this is the detailed estimates page, it is. They're going to report after the bell mañana. So you got the rest of the trading day today and tomorrow to figure out what you want to do. I like to just skip ahead down here to the nitty-gritty, and that's the numbers. So they're expecting a very good quarter this year. This is on revenue growth, 19.89%. Next quarter normalizes down to 4.28. Current year number, we have a gap in our data for some lovely reason today, but next year looks like 5%. So 5% growth on the earnings side. But look at the efficiency here with EPS estimates up almost 18% year over year for the current quarter. Next quarter looks like 7.76. Current year number stands at 10.78, while next year's 13.15. Very good growth here in terms of the EPS side. Here's where it gets a little divisive. So over the course of the last 60 days, you've got one analyst that has dropped their estimates for the current quarter. But just over the last week, you've got a brave soul stepping out and increasing their EPS estimates for the current quarter. Two have followed suit over the course of the last 60 days. If you look at next quarter's numbers, you got, again, over the last week, somebody's come out and dropped their number. And the current year, we got all sorts of stuff happening here where you got some people to the upside, some people to the downside. Same thing happening for next year, but overall a little bearish there. However, when you look at, this is the surprising part, guys, and this is why just looking at the agreement is only part of what we factor in here. You really have to look at this magnitude. 90 days ago, they were looking for 366 out of FedEx. Now they're looking for 389. Next quarter's gone from 310 to 313. Current year from 12 down to 1194, back up to 1196. Next year from 1339 up to 1354. So while there has been a little bit of a tick to the downside in these EPS estimates, it's not groundbreaking or earth-shattering, and it's still way better than things were just a short time ago. Recent history, these are the two disappointments in a row here. So the quarter ending here, quarter ending here. I don't think that the Whole Foods deal with Amazon is going to hurt FedEx that much. I don't think so. I could probably, that brings up a pretty good question. If you could probably dig it in, break out how much of an impact Amazon's, I mean, and then that's just a small part of Amazon's business. This is the food business. So, and then how much of that actually goes through FedEx. I bet you that number compared to how much revenue FedEx does globally is a fraction. It's got to be a very small fraction. So I don't know that it's going to make a huge impact, but I would have to dig in on that, and that would take maybe when I'm bored I'll do that. Okay, let's go ahead and take a look at, not that yet, let's look at the chart. So I'm zooming out a little bit here. This is going out to 2016, the start of 2016 here. Definitely will hurt Walmart, Trevor. I agree with you there. So Walmart has been put on notice. Sort of a volume area of control here for the market. It's 195s. You got a previous resistance level right around 200. So we had some consolidation. And then we've broken through the consolidation to the upside. So what you can expect really is a lot of support should the stock come back down to test this 201, we'll just call it 200 level, really. I mean, that's where the support's going to be. Pretty logical support at 200. Makes sense. So should it come to the downside, that'll be a retest. And then to the upside, again, we're in one of those scenarios where we don't really know what's going to happen up here, right? Because we're on the other side of other side of FedEx. And man, I see you guys talking about this Amazon story. You guys are trying to goad me into this, man. I'm telling you, I want. It's such an interesting story. I could go on and on about it. But yeah, you're right. You're right, Doc. That Walmart shoppers are not your usual Whole Food shoppers, but that's not really what matters here. I think it's Amazon putting the world on notice that they can enter this brick and mortar arena. And watch out. I mean, this is just the tip of the iceberg. Plus, Amazon's already come out and said that they're going to drop prices at Whole Foods. It's going to look a lot different there. It's not going to be a whole paycheck anymore. It's going to be, you know how Amazon had those like concept grocery stores where you don't even have a cashier, you just drop everything in your cart and then it's got little sensors and you go through and it tells you how much, and it'll probably end up linking your Amazon Prime account anyway, so you won't even have to pay for anything. Like right there, it'll be, anyway. Huge deal. Okay, so FedEx, the upside, who knows, right? It's broken out. It could go forever, theoretically. Nice, positive confirmation here on the money flows. CCI a little overbought, but that's to be expected on a stock that's just gone from, $1.86 on through to new highs. And granted, this is all happening while the NASDAQ is falling apart. Granted, FedEx isn't really worried about that, but unaffected, right? And we did get an opening on the large caps. We got an all-time high opening, I think, this morning. So good stuff. Okay, back to the bar chart now. And let's see what we got going on. So they're going to be reporting tomorrow. So we can go ahead and get our side-by-side view. Stock's at 210. That's going to make it easy. There we go, 210. Need my calculator, though. All right. So at the money calls, 425 by 440. We'll call that 433. At the money put is 5 by 515. I love it when there's a difference between the put and the call here. I love it. 507, especially when it's dramatic. I feel like that's a little dramatic. Anyway, we'll call that 507. So the market's looking for 940 on 210. Looking for about 4.4% out of FedEx, or a little over $9, which perfectly coincides with what our chart was saying, basically at this $200 level. Actually, it's better to do it this way. The $200 level. I've got a substitute mouse here in Chicago. I don't have my my go-to stuff, so computer's not. I'm just not as smooth, but I will be soon. Okay, so I think this is the kind of realm that we're gonna play in here on FedEx. So the initial instinct is obviously to kind of sell the call spreads out of the money here, and the put spreads out of the money here. Okay. Now here's another thing. Remember, this kind of has a tendency to chop a little bit. All right. So I think it's actually beneficial to give us a little bit, to be a little patient on this. A little patient. So let's look at a little further out rather than the front week. Right. Let's go out to this July expiration. See what we've got going on here. Also, let's change it from the side by side to the stacked view. Should be better. And again, you're going to expect this. These the strikes are going to be a little bit further out, but that's okay. In terms of, they're going to be like 250 apart when you get up here because the stock is so expensive. So let's look at this. On the bear side, and again, it's as easy as looking at this 220 222.50 call spread, and I'm doing it again where I'm keep closing my calculator. I was complaining about this last time. My keyboard in Miami has this nice little hotkey where it just pulls up my calculator, and I don't have that here. Okay. It also for some reason isn't recognizing like the keys, and I have num lock on, but It's not recognizing the keys on that side of the keyboard, which is weird, but I digress, right? Okay, so if you were short the 220 call, you're going to get the midpoint here is 230. Simultaneously going long the 222.50 to cover yourself a little bit there, you're going to pay back 177. So total to your pocket is 53 cents on this. Remember, the difference in the strike prices is 250 minus that 53 cents. You would have 197 at risk, so you could potentially make 153 on 197 at risk, or 26.9%. Okay, which is pretty decent, I think, for going out that far. Remember, we're going to sell time value in one and buy it in the other. So even if you go closer, or if we went even that front week, we might be able to get 20% in that front week, but we want the market to kind of wiggle itself out. We want some of that volatility just kind of get sucked out of this thing. So 26.9%, 27%, that's pretty darn good. So I'm going to go ahead and say that the bear credit is short the July 21st, 220, 222.50 call spread for a 53-cent net credit. And we're going to make that just as easy on the put side here. Now, I do believe, regardless of bullish or bearish, that this 200 level is stronger on the put side than that 220 is on the call side. And the reason for that is, in that chart, we saw that this was a previous area of resistance, so that should therefore become staunch support should the market come down to test it again. So in this case, you could sell the $200 call for $276. I'm sorry, $200 put rather for $276. So this is selling a $200 put, $276, simultaneously going along the $197.50. You're going to give back I did the bid. All right, run this back again. Pay no attention to the man behind the curtain. 280 is the midpoint here, guys. Sorry about that. So selling the 200 put is 280. Simultaneously buying the 197.50. You're going to give back 222. So that's 58-cent net credit here. Okay. Remember, the amount of money you're going to have at risk is 250 minus the 58 cents. It's going to be 192. So here you can make almost 30%. So I'm going to say the bull credit spread is short July 21st, 200, 197.50 put spread for a 58-cent net credit. Okay. So we're going to be doing Oracle tomorrow, which will be good. So we'll have plenty to talk about. I'm glad you guys are doing your homework on these. Any other information you bring is good. You know, it's not just me. This is just a starting point for your research. I hope you benefit from it, though. I mean, obviously you do. Otherwise, you guys would all turn me off. So that's good. All right. So that's, I think, the way that you're going to have to play FedEx overall is going to be with a credit spread, just because they have a tendency to chop around a little bit, and that's what I was talking about with here, right? I mean, sure, there are times where it has. You know, I tried to avoid speaking in absolutes, right? Because you just can't. But if you look at this quarter's action, straight up and then straight down, and you got another quarter straight down and then straight up, and then you got some wiggling back and forth before it finally drops. So lots of kind of choppiness on FedEx. So I want you guys to look at one more option here. Okay? And I'm going to go side by side and go back to this 220. Okay. So let's go to this 200 and this 220 range, right? So most of the time when we put these together, we're talking about iron condors, right? Where you're trying to force, you're on either side of the market, and you've got up your fences, and as long as it stays between your fences, you're going to make money, okay? There's another way to play this, and that's by trying to strangle this bad boy. So essentially what you do is you say that you add that call and you add that put, and you don't believe that the market is going to move as much as what that call and that put is saying, right? You think it's going to be much less. So here's one way that we can play this, is that we can short the 210 call and the 210 put at the same time. And to give yourself some protection, you're going to do it the same way, where you go further out and you end up buying a call, right? And then further out and buying a put. So it's similar to that iron condor, except rather than them being at two or several different strikes, you're going to put everything at the same strike, or at least you're going to put two of them at the same strike. So let me show you this, guys. Because this is going to be my trade that pays. And then I'm not going to forget a lotto ticket this time. Okay. So if we were going to strangle this bad boy, selling this call, we're going to get 433. Okay. And again, we don't want it to just run away forever on us. So we can still buy this 220 call. That's trading 123 by 131. So we can buy that for 127. 127. Okay? So you're essentially going to have a short call spread on this end that's going to get 306. So that's leg number 1. Leg 1, 306. Then on the flip side, what you're going to do is sell the 210 put. In this case, it's 5 by 515. By 515. So you're going to end up getting 508 on that. Simultaneously buying this 200 put, 143 by 152. Let's call that 148. Minus 148. 360. Okay? So add that 360 to, what was it, 306, I think, on the other side. Oh my goodness, the mark of the beast. I don't know if we should put that trade together now that it's the mark of the beast. That just scared me off. Maybe it's going to offer devilish rewards or something, but that's pretty scary. So it has the mark of the beast, so the strangle here has the mark of the beast, people. It's official. But here's the good news. So the maximum amount of money that you can make there is going to be the mark of the beast, the 666. Now, your maximum loss is $10 minus $6.66, or $3.34. So that's really what your scenario is. Okay? And you can just kind of wait it out and hope that it doesn't spike down well past this 200 level or spike up well past the 220 level, okay? Because you're only going to be wrong on one of these, right? Because it's essentially two short spreads. It's the 210, 200, and a 210, 220. Okay? So if the stock ends up closing somewhere here, you're going to cash in a max gain of that 306 on this side. And you've already pocketed the 360 on this side. So you're not going to lose unless it pushes further that way. And I'll give you your exact break even on that trade. So it would be 210 minus the 666. So as long as the stock was above 203.34, you're going to end up making money. And then on the flip side, the 210 plus the 666, it's going to be 216.66 to the upside. Is where you end up breaking even. Okay? So that doesn't look like a bad trade at all. So I think the trade that pays is basically the strangle on this one. So I'm going to try to explain this, I guess, in this text the best I can. So it's two separate credit spreads. So you're short the July 21st, 210, 220 call spread for 306, and short the July 21st, 210, 200 put spread for 360 net credit. So total net credit here of 666, the mark of the beast. What do you guys think about that one? I like it. Because of the tendency that this bad boy has to kind of chop up and down and chop around and, you know, go back and forth and whatever, right? Something you're going to need to keep an eye on, though, because you do have the potential to kind of close out one leg, let the other one run depending on what happens. But we always keep an eye on these things, so it'll be fine. And let me double check that that's what it was. Well, now we're... Did bar chart just do a number on me? Did that just happen? 10, 220. Oh, I got a bar chart refresh. Okay. Alright, cool. Double check the data on this, guys, because like I said, I don't have the live one here. Here's a 210, 220. That looks like almost 4. It is 380. And the 6. Yeah, okay. Might be even better. Might be even better than you think. Okay. Now the stock's moving a little bit, so it's affecting the chains here. As I've been rambling. So, again, that's kind of representative of what my thesis is here, right? So it doesn't necessarily mean that those are going to be the exact numbers you guys are going to end up seeing and or getting filled at. But that's sort of a representative example of what you should be looking for. All right? Savvy? Now, one more thing. The lotto. We didn't do this last time. Now, overall, I do believe that things will be good for FedEx. I do. So, really, a lotto would be that they blow it out of the water. I don't know that they ever have blown it out of the water so much that the stock goes skyrocketing. Well, I suppose here in September it goes from, 116 to 126. I mean, that's a nice little move, right? Yeah, I don't know about a lotto on this one. It's just too expensive. I guess you could say it goes up 10% to the up. Maybe these 225s. 225 call. It just seems like dead money to me, though, guys. I wouldn't mess around with a lotto on FedEx. It's just not conducive. It's just too big of a company. Okay? Just don't do it. I know you guys like it, but I'm not even comfortable giving you one today. Which is fine, right? If you really want to do it, I guess do those 225s. But I wouldn't mess around. It's just too big. It's just too big of a company. All right, guys? Okay, so got a nice little game plan here for FedEx. Again, guys, let me know. We've got the chat room, which is always open, which Kurt was nice enough to put together for us over at echat.co. And I believe it's, what's the number again, Kurt? It's like room number 213201, something like that. So if you're not there, go ahead. I think all you guys are there. I've seen all your smiling faces over there, so that's good. I'll check in with them. I'll check in there a little bit later today. For the folks that have not been fortunate enough to be with us here live, I hope that the chat over here on the left side of the screen is helping your viewing experience after. Remember, I still need suggestions. Always need suggestions, guys, for the next coming weeks for what you want to see. You shoot those over to livetrader@zax.com. That would be fantastic. And if you're not already signed up with us on YouTube, of course, there it is again, too. livetrader@zax.com. Shoot me those emails, and we'll get you all connected. So I want to thank everybody for coming out with me here today on Zach's Live Trader. There you go. 213012 is the room number on echat.co. And, yeah, guys, so thanks so much. I will see you in the chat later today and mañana for Oracle. Right? Oracle. So you won't want to miss that one either. Okay, guys, have a good one. I'll see you soon.